Hello and welcome. You're watching Market Trap, a weekly update on equity markets and outlook for next week with Mr. Pankaj Pandey, Head Research, ICICI Direct. Very good evening, Pankaj.
Hi, good evening, Gitu.
Pankaj, talking about the markets this week has so far been good, despite of the fact that Fed hiked by 75 basis points. There is no respite as far as the outlook for inflation is concerned from the Federal Reserve. But still, Nifty has been holding up. It's more than 1% gain for the week, and the metals space has done really very well. Where do you see markets heading? Because I remember from last few weeks you have been saying that Nifty gradually will move towards the record highs, and that's happening. And with 18,000 holding on Nifty.
Absolutely. So we still believe that Nifty is headed for a new high in the coming weeks. Now, this week has been particularly good for the markets given the kind of volatility what we have seen in a key market like US, and largely because of the Fed rate hike. Now, domestically, most of your sectors have been standing out. I think metal has taken a lot of beating off late, and we've seen metal as a sector sort of bouncing back. Similarly,
Right.
pharma as a sector sort of also bounced back. I think mid
Hmm.
caps have been not really outperforming large caps or Nifty for quite some time. We've seen even Nifty mid caps overall sort of doing well. So
Hmm.
what we are seeing is a largely broad-based movement with sectoral participation happening. Now,
Hmm.
globally, when you sort of look at the volatility is expected to remain high because of what we could gather from the Fed meeting is that while they have gone in 575 bips kind of hike this time to
Hmm.
4%, now
Hmm.
the terminal rate earlier expectation was about 5%. So
Hmm.
50 bips was expected in December and subsequently 25 bips of another two hikes. But now
Right.
there is still a sort of open question in terms of what will whether there will be a further rate hike on that terminal rate hike.
Right.
So from that perspective, terminal rate is still a sort of a question mark. So from that perspective, I think Indian markets holding out very well is pretty strong, and we're quite confident that Indian markets are headed for a new high. I think we have
Hmm.
already been sort of delivering relatively far more better performance compared to global counterparts, and that is, I
Right.
think, going to remain there. So
Hmm.
I think overall, with broader participation happening from across most of the sectors,
Hmm.
our sense is that in the coming few weeks, we'll be looking at a new high of more than 18,600 on the Nifty.
Hmm. Let's talk about the auto volume numbers for the month of October. They have been a little bit muted this time. What is your view on this space? Because the demand, the pent up demand that was driving these stocks higher is now seeing, a little bit fizzling out.
So yes, October volume numbers were not really much to our liking overall.
Hmm.
And so most of the segments have we seen month on month decline. I think except for tractors where the overall growth has been there. So tractor as
Hmm.
a overall space for Mahindra and Mahindra and even for Escorts did well. And I think what you see is performance in patches. So, for example, in two-wheelers, while most of the players have sort of struggled, I think Eicher
Hmm.
did quite well. So, this is the second month their overall volumes are holding 80,000 plus. And
Okay.
similarly, in the PV sales, we are seeing a 5 to 6% kind of a degrowth or high single-digit kind of month-on-month degrowth overall.
Hmm.
So our sense is that largely companies have produced more for the festive season, and now probably what you see is more of a selective performance, especially for companies who have sort of launched more of new vehicles. So from that perspective, I think while it is a sort of a temporary, what do you call, month on month, sort of a subdued number, but our overall sense is that with the overall commentary and with the overall order book, you'll continue
Hmm.
to see double-digit growth for key segments like PV and CV. So
Okay.
from that perspective, I think nothing changes much. But yes, the numbers have been a bit subdued compared to what we have been anticipating.
Hmm. Hmm. So, what is your take as far as the stock recommendations concerned in the auto space right now?
So I think number-wise, numbers have been good. So for example, Maruti numbers or margins were quite a surprise for us. So we have raised their target price to 11,200. M&M
Okay.
continues to sort of do well, where the target price is 1590, and iShare we've been liking of late more with a
Mm-hmm.
target price of 4,170. So I think all these three companies are coming out with decent set of numbers, and our sense is that the worst of the margin is behind us. So you'll continue
Mm-hmm.
to see better margin performance and better volume growth for these companies.
Mhm. Pankaj, as far as the NBFC sector is concerned, there has been a divergence from the banks. The banking stocks have really performed, and the numbers that they are coming out are with very nice numbers for all the banks, be it mid cap or be it the frontline tier one banks. What is the issue with the NBFCs now that there has been seen a bit of momentum in the on the last trading session of this week for Bajaj Finance? But overall, if we talk about the NBFC sector, it has been an underperformer. What is the reason for the same, and what would your view be on the same sector?
So when we sort of, you're right, when we sort of look at the NBFC as an overall pack, while the banks have been sort of doing exceptionally well in terms of price performance, in terms of fundamental performance,
Mm-hmm.
NBFCs have been sort of quite subdued from that perspective. Usually, our sense is that in a rising interest rate scenario, NBFCs are at a slight disadvantage compared to banks. Banks
Mm-hmm.
have started becoming more aggressive, so that is also sort of playing out. Now, when
Right.
you sort of look at NBFC in particular, so while their performance also has been largely sort of pretty good, credit growth has been good, asset quality has been sort of improving. But what
Mm-hmm.
you see is a compression in margins because what is happening is that the cost of deposits for NBFCs has gone up while the yield on advances or the hike what they charge to customers is taking a bit of a time, and as a result of that, the spreads are sort of under pressure, and
Right.
which is why, despite all the sort of ticking all the right boxes, you're seeing the NIMs being under pressure for NBFCs in general. And
Mm-hmm.
also, our sense is that going forward, we would still continue to see this kind of a divergence where NBFCs could still sort of struggle compared to banks overall because we also need to understand that the overall system liquidity, which was in a big surplus, now is in a deficit. So even your
Right.
short-term rates have gone up, and eventually that has an implication for NBFCs also. So
Mm-hmm.
from that perspective, between the two, I think banks are looking a lot more better. But having said
Mm-hmm.
that, I think Bajaj Finance is clearly sort of doing exceptionally good growth overall and with a good growth
Mm-hmm.
guidance. So that is one
Mm-hmm.
NBFC which we have been liking with a target price of 8,650. Typically, we prefer NBFCs B2C kind of NBFCs rather than wholesale funded or wholesale lending kind of an NBFC. So from that perspective,
Okay.
I think this looks good. And I think within banks, you have IDFC First Bank, where we raised our target price to 70. That is looking good. Axis Bank, we
Mm-hmm.
have given as a part of Muhurat pick. And
Mm-hmm.
MCX, we have started liking post numbers because I think this is the first quarter we are seeing the options volume overtaking the traditional futures volume. So now
Okay.
you have both options and futures sort of contributing. So I think so this is another stock which we are liking with a target price of 1,700.
Mhm, mhm. Sugar space has been in focus this week because we have cabinet meeting where ethanol blending, was talked about, and the ethanol prices have been hiked. But on the negative side, we have a news that the export ban on sugar export will continue for some more time. So there's a mix of news, good and bad news for this sector. But the sector has not been performing if we talk about in the last, say, 8 to 9 months. So what is your view on the sugar space, and would you recommend some stocks to buy, for the long term view?
So yes, when you sort of look at sugar space, has not been doing much in terms of price performance in the last few months. And while see all the structural drivers are in place, so we have already achieved 10% of kind of a blending. And for this
Mhm.
upcoming sugar year, there is an expectation that we'll see 12% blending, and the ethanol prices have been raised by 2 rupees. Now,
Right.
while this has been done, now we all know that while inflation is a sort of a global concern, domestically also inflation is on a higher side compared to RBI's comfort
Mhm.
zone. And as a
Mhm.
result of that, government is taking sort of baby steps in terms of allowing a full-fledged export of sugar. So which is why there
Mm-hmm.
is an expectation that they'll allow 5 million tons initially, and after that 2 to 3 million tons. So eventually we'll
Okay.
be exporting probably similar quantum like last year. But
Mm-hmm.
this time it will happen in sort of phases, and which is why we are seeing a break in the momentum of most of your sugar companies. Otherwise,
Okay.
we feel that the domestic production is expected to be good. Your
Mm-hmm.
blending is going to go up, and as
Mm-hmm.
and when the blending sort of keeps going up, the volatility in the earnings for sugar companies sort of reduces, and which is
Mm-hmm.
where we are seeing, which is where we expect overall the re-rating to sort of keep happening. And we
Okay.
continue to like companies like Dalmia Bharat Sugar, Triveni Engineering, Dwarikesh. I think all these companies would be debt free in the next 12 months, and
Mm-hmm.
not much of a capex requirement. You'll see dividend payout from these companies. So I think
Mm-hmm.
while things are sort of, or you, we don't have a very clear runway in terms of exports, but
Mm-hmm.
overall it will happen in phases as and when the government gets comfortable on the inflation side. But our sense is that structural drivers are in place for sugar to sort of keep doing well.
A good set of Q2 numbers declared by Bharti Airtel. What is your view on Bharti Airtel? Would you recommend buying the stock at the current levels because it has been holding up quite nicely?
Absolutely. So I think Bharti's number were quite a sort of a positive surprise. I think this is the first time we are seeing premiumization happening, and
Mm-hmm.
which is why the ARPUs have increased to about 190 odd rupees. So this is more than what one would have sort of anticipated in a normal kind of a scenario, and that is sort of reflecting in far more higher EBITDA margins of nearly 52.5%.
Mm-hmm.
And I think going forward, there are two clear focuses what the company is looking at. One is since our sense is that Vodafone is still sort of struggling with, say, financing for their impending 5G launch. I think Bharti
Mm-hmm.
Airtel clearly sort of benefiting from that particular trend. And so, and on top of it, I think the premiumization or the shift of 2G or 3G customers to 4G is also sort of happening, so which will
Right.
benefit. So which is why we are very positive on Bharti Airtel with a target price of 960. But I think
Mm-hmm.
for a bigger price performance to happen, I think we would need a higher pricing for 5G, something which the company is initially still not hoping of, but eventually
Okay.
there is an expectation that will also sort of happen. So
Mm-hmm.
I think overall things are moving in right direction, but a bit
Mm-hmm.
slower.
Mm-hmm. L&T also declared its number, and if we see the order book, a very strong order book, and the execution timeline. If we talk about the revenue visibility for L&T, it is nearly 2 to 3 years revenue visibility, clear visibility, 3.72 lakh crore of order book. How do you like this stock?
So I think when you sort of look at most of the sectors, the infra is the only sector which hasn't really sort of done well. And our sense is that see, last quarter with monsoon being focused, typically you don't see much of a infrastructure related activities on a full swing. So from
Mhm.
that perspective, our sense is that infra as a sector is looking good, given relatively lesser performance compared to the lot of other sectors. Now, with
Okay.
that in perspective, I think L&T is one of the brightest spots to sort of look at. Here, our target price is about 2,355. Now,
Mhm.
like you said, they're sitting on a pretty healthy order book, and our sense is that you'll see far more better improvement in margins, given the fact that some of the low cost orders have been sort of executed, and along with that, the company is looking to sort of divest some of the non-core business. And
Mhm.
I think for company, so company has guided for say about 15% kind of a growth guidance in terms of revenue, in terms of order inflows. Uh, Even for the next 3 4 years, our sense is that with the kind of capex which is being announced or the kind of order pipeline, I think company
Mhm.
could easily sort of achieve those kind of numbers. Though we have also taken conservatively 14% kind of a top line growth and 16% kind of a bottom line growth for the next 2 years. But our
Mhm.
sense is that infra as a segment is ideally should pick up from here on, and L&T being a key player should benefit from this overall trajectory in capex. And our sense is that even in this upcoming budget, you'll further see far more focus continuing on the on the infrastructure as an overall segment, of which L&T is expected to be a big beneficiary of.
Pankaj, let's talk about the pharma space. This space is back in action. We are seeing frontline companies like Sun Pharma, Dr. Reddy's pulling up fast as far as the price performance on the stock market is concerned. How have the earnings been, and what will your bet be in the pharma space?
So I think pharma, when you sort of look at exporters, I think for quite some time this segment was sort of lagging big time in terms of the overall performance being quite muted. I mean, take the
Mhm.
example of Sun Pharma, for example. So Sun Pharma usually has sort of struggled a lot there, but now what we see is that overall things changing for both, say, Sun Pharma and Dr. Reddy. So for Sun
Yes.
Pharma, our sense is that when you sort of look at these special, going forward, our sense is that your US revenues will contribute 30% of the overall top line. And of
Mhm.
that, half of it is going to come from specialty or complex generics. So from that perspective, and mind you, this particular segment is high in margins, and which is why we expect gross margins to improve, EBITDA margins to improve, and return ratios to improve. And this
Okay.
was about 11%, say, in FY21. A few years back, it was 7%. So one is the share of overall US pie sort of come down, and then within that, now you are seeing, say, 50% of the revenues coming from, say,
Mhm.
specialty or branded products. So from that perspective, I think the overall product profile or revenue profile is going to get better. I think something
Okay.
similar is happening or is expected to happen with even Dr. Reddy as well, because
Mhm.
they are focusing on good number of launches of specialty products. So we will cut in DRL also. We are expecting gross margins to sort of expand. Similarly, EBITDA margins will also expand, and that will lead to better return ratios. And which is why we have a buy on both. So Sun Pharma, it's about 1,225, and
Mhm.
in DRL it is about 5,215. So both the
Okay.
companies, I think, are looking brighter from the exposure to US markets.
Mhm. Nifty Pharma index closed up 3% during the week, and the top gainers were Aurobindo Pharma gaining 6%, Glenmark gaining 5.4%, even Sun Pharma gaining around 5% for the week. Lotus Lab is up 5%. So, quite a bit of momentum returning back to the pharma space. Now is the time for Hidden Gem. So, which is the stock that you'll talk about today, Pankaj, in the Hidden Gem space?
So it's a sort of a very well-known name. So the company's name is United Spirits. Target price is
Mm-hmm.
1,050. Now we all know that it's a leading alcoholic beverage company in India. Now there's some structural changes which are happening, and which is why we have been sort of liking this company. Now, what the company has done is that they've done a slump sale of about 32 popular brands for about 820 odd crores in
Mm-hmm.
the month of September. Now, so they are sort of revamping the overall complete product mix. Now, prior to this sort of a slump sale, the volume split between prestige and above and popular category was 50-50%. Now,
Okay.
popular as a category was growing less, was carrying a lower amount of margins. Now, with this slump sale, what you see is this split or the prestige and above will be contributing 80%, and
Mm-hmm.
popular contributing 20%. And our sense is that they're going to launch further more products in the premium and above, prestige and above category. So from that perspective, that portfolio is going to become even more stronger, will carry better, more margins. So we are not
Okay.
expecting volume growth to sort of pan out, but you will see more of margin expansion and bottom line growth to sort of pan out. And which is why we
Okay.
are liking this company, because for a quite long period of time, this company has not been sort of delivering much in terms of numbers. But our
Mm-hmm.
sense is that for next 2 years, you will see numbers keep on getting improving. The company is already debt free. They've got a cash balance of about 700 plus crores. Our sense is that in few months, they'll also probably come up with a dividend policy. Then I think we are still not valuing the RCB IPL team which they are holding.
Mm-hmm.
Typically, when you look at the book values to about 2,000 odd crores, whereas the current value is quite high. So we are still not valuing that. And
Okay.
mind you, with the kind of new bidding which is coming, you will see these teams being, or the previous teams or older teams being profitable. And so from that perspective, I think this is one company where you have number of triggers in terms of, while the top line growth may not be there, but you will see margin expansion, you will see profit growth, and also you will see multiple triggers in terms of IPL getting sort of recognized or getting its due share in the overall sum of the parts. Though as of now, we are not sort of valuing it. But our sense is that this is one company hasn't really done much in terms of price performance. Looking good, it's a portfolio kind of a stock. I believe that this is a good stock from a hidden gem perspective.
So the hidden gem for this week is United Spirits. Target price is 1,050. Pankaj, we have a few numbers next week, and the major event, the Fed event, is over. So how will you play the markets for the next week?
So for next week, our sense is that largely we are headed towards new high. If not next week, probably in a couple of weeks. Our sense is that Nifty will be making a new high, or should be making a new high. And now, since most of your volatile events are behind us, so you'll see more of a stock-specific action panning out. So we have seen DVs or Coal India, Bosch, Pidilite. So again, next week is pretty heavy in terms of results. So
Yes.
the next week will be the last week for the result season largely. So you'll see more of a stock-specific movement. But on a Nifty, we are expecting markets to hit a new high. So I think new high is in the horizon for Nifty and for a number of stocks as well.
Yes, fingers crossed. So next week, maybe next week or maybe in another 2 to 3 weeks, Nifty is going to surely hit a new high as is expected by Pankaj. So let's keep our fingers crossed. Thank you, Pankaj, for your time, for giving your views on the markets. Thank you so much.
Thank you so much.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.